Good morning, everybody. How's everyone doing? Today is, of course, Friday, October 21st. Good morning to you all. So, before we go any further today, I just want to talk about Friday rules, and we'll recap it again as we get more people in the stream. But because today is Friday, let's remember to not do anything silly. Let's remember to go into the weekend with a firm mindset that, you know what? We traded well this week. We didn't do anything that jeopardized our account on a Friday. We weren't YOLOing 100% of the account value into same day expirations, zero DTEs on today's session. We didn't trade for the sake of trying to hit a home run and turning a red week green. We just traded according to what the market gave us, and we went from there. So Friday rule is very important on every single Friday. All right, here we go. What else is on tap for the economic calendar? Nothing into the remainder of this week. You can see right here, Friday is, of course, blank. Completely open, unless we get some surprises, which I don't believe we're in store for. We have a pretty benign economic calendar here. Next week, as we know, things heat up again. So let's take a brief look at what we have on tap for next week. Next week, we're going to be getting flash services. The PMI number reads on Monday morning. Yellen will be speaking Monday morning as well. 10 o'clock on Tuesday. Consumer confidence, that's a big one. Thursday, 8:30. This is where we'll be live at 8:15 for the advanced GDP quarter over quarter. And at the same time, of course, unemployment as always on your Thursday read. But Friday, 8:30, core PCE, right? This, as we know, is the Fed's measure of inflation. So we'll be live 8:15 here, and we will be live 8:15 here. Okay? So tune in a little bit earlier than normal next Thursday, next Friday. Okay? All right, that's what we've got on the economic calendar and a little bit of a preview of what's to come next week. It heats right back up. So quiet this week, getting spicy again next week. What do we have on the docket for economic news in terms of headlines from CNBC? The major headline today is stock futures slip as traders weigh the latest batch of corporate earnings, namely Snapchat with the big miss. Right, Snapchat with the big miss, and it took a big old fall, hence the title of today's video. And for some reason, the market's fairly sensitive to Snapchat earnings. I think it's probably because it's a precursor to Meta, Facebook, of course. And Meta is definitely a much larger market-weighted component than Snapchat, but it's just like, okay, if we know social media companies aren't doing well, then maybe that's, again, the forecast for Meta to be a miss as well. So just something to be thinking about. But yes, stock futures are slipping slightly as we're about to open up here this morning. Very small and minor gap down, but a gap nonetheless. And we are back inside of the daily balance area firmly with an hourly trend change. So we'll talk about that in just a moment. But for now, what else do we have for stock-specific headlines? China-owned TikTok denies it could track U.S. users. Snap plunges more than 25% on the miss, as we just discussed. Often overlooked economic measure is signaling serious trouble ahead. Okay. Cathie Wood scoops up another 13.7 million in Tesla shares after the sell-off. Interesting. I know how does the saying go? A bull market makes everybody look like a genius, and a bear market makes a fool out of bulls and bears alike. Well, I don't know. I suppose she's sticking to her guns and kind of averaging into Tesla, but man, just rough to be inside of those ARK ETFs. I think someone actually created an inverse ARK, which was kind of funny. But regardless, more of a buying opportunity for at least Cathie inside of Tesla there. What else do we have here for stock-specific headlines? Apple. Another new iPhone update coming on Monday. I don't know exactly what's going to be new. Hopefully it's something with the iOS, it looks like, in here. Guys, as I've told you in the past, I'm rocking the iPhone SE. It's like the iPhone 5 with the updated brain inside of it. I can't even get the latest iOS because it won't support it. The hardware won't support the software. I could go out and go get a brand new iPhone, but I just prefer my small, tiny little iPhone. The big giant screens these days, not a fan. And I get it. I know they make the small version again. Probably going to look into that when this one dies. What else? Stock-specific stuff. Anything else here? Biggest movers pre-market, we know that American Express is an earnings candidate, so is Verizon and Snap reported last night, so that shouldn't be too much of a surprise. This is interesting. Facebook shuttle bus drivers are losing their jobs as Meta slashes costs and employees stay home. So all these big grand campuses that the big tech companies built out and now everybody's working from home, I don't know, it just seems a little bit illogical to have these big campuses, but who knows, maybe they'll get some use someday. What else? GM's new GMC Sierra EV offers traditional truck buyers an upscale electric alternative to the Hummer. How does that look, though? Let's open this one up in a new tab. It's like they did fine with the truck. I think the truck body looks fine, but the stinking grill, man. What is going on with that thing? It's almost the same as the Mustang SUV, the electric version, that Ford makes. That's not, to me, does not have it going on for the front grille. The rest of the truck body looks fine. It doesn't look too futuristic. It doesn't have stupid looking rims on it, wheels, So I don't know. Decent look, but fix that grill. Come on, fix the grill. Give us something traditional, a little bit more beefy than just a flat, plasticky looking junk. Danaher shares slide after a knockout quarter. Okay, so not great. What else do we have here? Stock-specific stuff. Nothing crazy. That's it. No upgrades, downgrades. The main thing is really just that Kathy is scooping up 13.7 mil in Tesla. Released from Apple from a headlines perspective on Monday, and that's it. Really, really tame morning. Let's take a look at the earnings calendar just to make sure that we are in line with what's taking place here this morning. So again, after the close yesterday, we got Snapchat, 25% drawdown in that name. Verizon, American Express, and Schlumberger are the movers that you want to watch, if anything, here before the open. Everything else strikes me as not really worth watching. So with that being said, let's get on over to the platform. Here you go. There's your Snapchat chart, right? I was looking at it pre-market and just absolutely horrific from, let's say, a close at roughly 1075, opening 775, $3 haircut. Ouch. So anyways, let's get on over to the ES Futures. This is the 4-hour chart of the ES Futures, but before we dive into it, you guys know what we have to do. We've got to see who's in the chat. So who's here? Scrolling all the way up to the top. Looks like Nick Farrell is kicking us off. Thank you, Nick. Thank you for supporting the channel as well. Green name, green cash bag. Hopefully that turns to red and then gold, and I think it's actually green, blue, red, gold is the situation, the series with the cash bag. So Nick Farrell, thanks for kicking us off. After that, we've got INF, Steve, Soldier Down, Almost Davy Day Trader, JJ Cabrera, Ryan Speed, Christina Ann, Swipe, Plant-Based Will, Roger Tutt, M. Spears, Jay with the gold cash bag, Tunes, Mickey, Taking a Walk, Hans, Random Factor, Fairy Boys, Clo Inc. We've got Slick Messy with some beautiful emojis for us. Same thing with Live Better. Appreciate the emojis, the sunshine. Thanks for brightening up the chat. We've got LA, Stevie J. We've got Nick, Pete, and Repeat, Nancy. We've got Greg Rulo. Good morning, sir. We've got Jeep for Life, Mona Makes Mora. We've got RB, Davey. Gregory Rulo says, hit the likes. Let's go. Let's see if we can get 600 today. That would be something else. That'd be wild. Lioness, Rob, Tri-Trader. Headwing, we've got Ramona looking for green names now. Kurt also has a gold cash bag. Thanks for supporting the channel, Kurt. Really appreciate it. Everybody say thanks, Kurt. And just, marvel at that gold cash bag. Looks great. Ross, we've got Ross Meir. Grant L. Alex Rodriguez, Dark Trader. Looking for more green names here. Siege, Stargazer. Steve, thanks for joining as a supporter. Nice. Ty, G Money, Empower. Chris Parker. Who else? Is that going to do it for now? I think that's going to do it for now. Sharath, I see you. WT. Susan, Virginia Beach. Inza. Daro. We've got Scott. Cool. All right. So good morning, everybody. Thank you so much for tuning in. If you want a shout out, again, the earlier you get here, the earlier you say something in the chat, I'll probably get you before I flip over to just calling out the green names. So anyways, that's what we've got on tap for people in the chat. Good morning, Stocks and Rocks. Can't forget about you. I see that green name. So let's get going. Here we go. 4-hour time frame chart on the ES. What do we see here from a price action and structural perspective? Guys, this is the balance that ended all balances. I mean, it's just absolutely nuts. Look at this area. The market cannot seem to get out of its own way. We tried to go higher here. We tried to go lower here. We tried to go higher here. It can't get out of its own way. So where are we currently? Right back down to the midpoint of the balance area. So what does that mean for today's session? It probably means in the grand scheme of things, don't be overly attached to a particular direction. Your edge doesn't really exist here in the midpoint of the range. It's kind of up here at the top or down here at the bottom. We always say this on the channel, either a breakout or a mean reversion type look at the bottom, or a breakdown, right? So being at the midpoint, you kind of got, I don't want to call it directly 50-50 odds, but the risk reward is certainly not as good as when you're trading at the top of the range or bottom of the range. One thing I will say is that we could be looking at this as another look above and fail, target the bottom end of the range. So knowing that, I would definitely give the bears an upper hand, especially after this fake breakout, especially after the rejection from yesterday right off the top of the balance again. That was one of the scenarios we discussed yesterday morning, right? So 4-hour structure, I would give the bears the upper hand, and it does look like so far this is holding for a lower high. So the 4-hour trend appears, at least as of right now, to remain downward. You could make the argument that over time there's the possibility of building out a higher low here, but until we actually confirm it with the equal high up here, then it's like, okay, we're still in a downtrend, right? We've got high, lower high, and in a downtrending market overall, who needs to prove themselves? It's not the sellers. The sellers don't need to prove themselves. It's the buyers with a new higher high or equal high to neutralize the downtrend, which we do not have here on the 4-hour time frame chart. So bears have the upper hand on the higher time frame structures. Let's drill on down to the hourly chart. See what's happening on the hourly. So again, here's another great visual of how this market just seemingly can't get away from this balance area. If you just draw a line through like where price action is currently, we're touching it here, 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 here. I mean, just look at how price is just, I don't want to say like a magnet towards this area, but it seemingly can't get away from it. It cannot get away from this kind of zone here, the 36, let's just round up, call it 36.50, right? So it's just a balanced indication. It just means, again, don't keep your expectations in check of this market until we firmly move outside of this box with like a push for a clean higher low and then we're back higher, or we push lower, clean lower high and back lower. Just expectations should be we're just in the balance area. We're playing ping pong. The market's trying to make sense of what's taking place here. We've got all of these, economic indicators that are saying it's the end of the world. We've got the possibility. Here's another thing. If you guys don't follow Michael Gayed, I think it's Gayed. If you guys don't follow Michael Gayed on Twitter, he is a huge, he manages an ETF, basically. And although some of his tweets, they can get a little bit repetitive. He does this thing where he says few all the time, or few understand this, exquisite, whatever. Doesn't really matter what he says from that perspective, but what he says that's interesting, and I find quite compelling, is that, because the bond market has taken such a hit along with the stock market on this drawdown for 2022, if this continues to get worse, then, it's almost the end of the world. The pension system blows up. The whole financial system is built upon the fact that long-dated treasuries will offer some sort of positive return. And the fact that they're so negative right now, correlated with a down market, is just, absolutely, it's baffling. It's like something we have not seen ever, right? So I don't want to say that the worst case scenario is bullish, but like, if things continue to get worse, they can only get worse for so long before there's, I don't want to be too doomsdayer here, but until there's a pretty major failure in the system, right? So long-dated treasuries kind of have to start slowing down or turning around, else things just continue to get nasty, something breaks, and the market slides. So just to bring it back down, yeah, his portfolio got absolutely wrecked in the RORO, right? Risk on, risk off. He also runs JoJo, junk on, junk off. But regardless, it's it's almost like, because everybody is so bearish, because everybody thinks that the whole system is about to collapse here, it's almost like it's got to turn higher. The market, the financial system, the financial institution stays intact, and we at least go sideways, right? So Anyways, I know that was a bit of a tangent. I know it's not all that useful for day trading, but what it is useful for is mindset and perspective and just understanding that we shouldn't be, we shouldn't really have anything crazy in mind until one of these situations takes place and we get trending to the upside or we get trending to the downside. One or the other, right? So just going back to mindset, like, if everything feels like it's the end of the world, just remember, hey, we're still in this box. Right? We're still in this box. We are not trending lower in the grand scheme of things, and we're also not trending higher. So just remember that, I suppose. So in terms of day trading and what we're, the takeaways for today's session, patience, manage expectations. It's a Friday. If you don't want to trade in the midpoint of the range, fine. Walk away from the screens. Go outside. Get some fresh air. Go look at the foliage if you've got foliage where you live, right? Anyways, SPY, 1 hour chart, ES, 1 hour chart, right? We've got highs, now a confirmed lower high right off of this zone, right? We had the equal high, confirmed it as kind of a lower high set yesterday by making the new lower low, right? We technically made a new lower low and we're pushing lower in the pre-market. So anyways, in terms of the headline of today's video, we've got Snapchat earnings, which were an absolute blunder. And now we've got the ES on the hourly chart flipping into a downtrend, right? So this is now the hourly trend that we're focusing on instead of what was kind of this new uptrend that was forming. So with that being said, it would make sense that we can carry forward a slightly more bearish stance here in the ES, looking for lower maybe towards the bottom of the balance range that we've been discussing here, which is closer to 3,600, okay? So higher time frames look bearish. 3,600 could be a possible target. If we turn around here, you probably want to see the market get some price acceptance above the value area value area low from yesterday and the overnight high, right? So if this is going to flip to being playable to the upside, if we're going to get back inside of this range and we're going to build out a little micro range, you want to see a higher low above value area low and the overnight high. If that happens, okay, we're back above that last lower low. There's the possibility that we could set another lower high. I mean, don't get me wrong, that's certainly a possibility. But above the value area low, above the overnight high, I would at least be slightly more neutral in this market, okay? For Nick, who's asking about the value areas, I pull them from the volume profile from the market profile, if that makes sense. So I have the market profile up on another screen here. I can just actually show you that. Here we go. For anyone curious about the value areas and where I get them, here we go. This is the ES TPO chart, market profile chart, right? And I'm always grabbing the volume value area. So here's the high, here is the low, right? It's the shaded yellow area, which would just indicate where 70% of yesterday's volume went through. While we're looking at the market profile, let me just also reiterate the importance of yesterday's low, poor low. Look at that, 3 TPOs across. Terrible end to the auction. That is not how the auction should end. If we retest it, just expect some sort of reaction there, which makes sense as well from a gap fill perspective, right? We're opening on a true gap down. We'll get to the 3 questions right now, but we're opening on a true gap down. So if we, rally and tag that, just expect a little bit more of a firm reaction as opposed to if this were the proper end of the auction and we came up and tagged it, maybe you dribble back in. I would just expect something a little bit more severe off of a poor low like this, okay? So that's just a brief look at the TPO market profile. Back on over to the candle charts, though, here we are on the 15-minute time frame ES. Let's walk through our 3 questions, right? Question number 1, where are we opening in relationship to the prior day's range? Here's your high, here's your low. We are opening on a true gap down, and we've also got to adjust our overnight low. Let's do that now. Overnight low. There we go. So, true gap down, bearish for question number 1. There will be some shock and awe on this morning session because we're opening outside of range in the bear's favor. Question number 2, where are we opening in relationship to the overnight range? Overnight range was fairly compressed. There's your high, here's your low. We just adjusted it, right? And we're opening pretty much smack on the overnight low, which of course sets up decent risk reward for a gap fill or a gap fade trade on this morning session. Question number 3. Last but certainly not least, what's the overnight inventory position? The overnight high basically was the settlement, the closing print from the prior day's session. So all of the activity today, or coming into today at least, set up in the bearish direction. So 100% net short overnight inventory. Now, what does this mean for the market open. This means we've got a pretty interesting situation to deal with. Yeah, Hans, don't worry. We're about to talk about the gap fade right now. We're about to talk about it right now. So these three questions set up a very interesting situation where we can look for a counter trend trade and look to go long even though we're gapping down, right? So question number one tells us that there will be shock and awe. People will be waking up here this morning and saying, oh goodness, I went long up here. I was expecting, to stay up and, bounce and maybe rally in the pre-market. Didn't happen. So now what? I've got to close out my long. I don't want to hold it through the weekend. It's a possible scenario. You've got people who piled in long here towards the end of the day thinking, okay, we're stabilizing. We're going to see a gap up tomorrow. Didn't happen. So do those longs do the same thing and close out for the long weekend? It's possible. You've also got shorts. You've got shorts who were short from up here. You've got shorts who are piling in at the low of day from down here. And what do they say? They're like, oh, okay, we're up here this morning. Do we want to cover those shorts and not risk holding it through the weekend? Do we want to add to those shorts because the trade is working and push this thing lower? So what I'm getting at is question number one would indicate to us that there is going to be shock and awe this morning. People are going to wake up, go to the desk, and say there's something to do. I have to press a button. So knowing that, you'll likely get some kind of activity sooner rather than later. Question number two would indicate that because, we are opening on the overnight low, there's decent risk reward to the upside. So let's just clean this up here. Let's clean this up a little bit more. And all right, that's good. So there's decent risk reward to the upside, right? If we're opening on the overnight low, here's the gap rule, right? If we fail to accept underneath the overnight low, trade back long through the open, that's a long trade to close the gap overhead. So if this makes sense from a risk reward perspective, then there's certainly a fade in play. So for Hans, who is asking about the gap fade, this is the gap fade, right? If you open, flush the overnight low, and then recapture the opening print, you fail at the overnight low to go lower. The sellers are not pushing prices lower. And then you move back up through the opening print, wherever that may be. That is usually where you look to start fading for the gap close. And as long as the risk reward here makes sense, you can use a stop loss under the low of day. You can use a stop loss just on the other side of the overnight low. Whatever you want to use, as long as it makes sense from a risk reward perspective and it's a logical location, it's not a random arbitrary percentage-based stop, then guess what? We're good to go. If we can, squeak out what is that? Maybe a 2.5 to 1, a 2.5 to 1 risk-reward ratio, decent, right? You're never going to get the beautiful, I shouldn't say never, but it's going to be very rare that, right out of the gates, you land a beautiful 3 to 1. Usually those types of gaps are often so large that they're difficult to trade. So anyways, that's what I'm thinking about here on this morning's open based on question one, telling us that we will have early morning trade possibility based on shock and awe. Question two, being right up against that overnight low currently. And question number three, the inventory is net short. So if we do get any correction to the inventory, it would make sense that it would be in the upward direction. You get the weak hands who see that we flushed the overnight low, don't get any follow through. Anyone who's, excuse me, the voice, anyone who's short from in here, as soon as we start moving through the opening print, as soon as we start making that move through the opening print, these are the first people to close out. They're weak-handed shorts. They're playing in the pre-market, right? Generally, we know that this type of volume is not indicative of, Bank of America going out and shorting, 1,000 ES contracts before the bell rings. They don't operate like that. Big banks, big hedge funds, they don't operate like that. Okay, pre-market traders are, unless there's a news release, unless there's some kind of big CPI print, we talked about that when it happened, right? Unless there's a big deal, unless there's economic data, this is discretionary. I don't want to completely, box in retail and say it's retail trading only, but it's not the big boys, right? It's not the big boys. Simon, overnight inventory. And I guess for anyone else who's curious about overnight inventory, it just means the position of traders. Think about the word inventory might sound fancy or it might sound unconventional when it comes to trading, but inventory just refers to the count of traders, right? You could say 100% net short trade in the overnight session because it spent all of the time underneath the settlement print. We just use the word inventory because we think of them as literally, data points. Don't think of these people as traders. Just think of them as data points, So overnight inventory just refers to what the position is of the overnight session, okay? Jimmy, let's tone it down with the all caps. Just say what the overall position balance is. I don't even know what that means. I have no idea what that means, Jimmy. And all caps, very aggressive on a Friday morning. Have we looked at the SPY chart yet? No, we have not. We're just going through the ES, and I'm about to walk through some scenarios. I know the chart screen looks very sloppy right now, so let's clean it up, and I'll just break it down, boil it down to the very simple scenarios. So let's see if we can get a couple more thumbs up buttons, and I'll give you the situation here in the ES. We'll take our poll, and then we'll move on over to the NQ. So hopefully I answered any questions people might have had here. Silly bot. We got a bot in the chat. Although it's tame this time. It's not the typical bot, and it's just one message. So I feel bad blocking them because they're not as aggressive as most bots, but they've got to go, so sorry. All right. Yeah, free girls? So here we go. Let's go into sub mode only. Yeah, I agree with you guys. Let's do sub mode only. For anyone who's new to the stream, who is not subscribed, again, if you want to chat with us, I invite you to subscribe. There's no time limit. Sometimes people set up a minimum subscribe time. I'm going to set it to any duration. So if you want to subscribe just to chat in the chat box and then unsubscribe after, doesn't bother me, right? If you want to subscribe, if you found value here and you want to chat anyways and stay subscribed, even better. But we just do this to sort of hopefully eliminate the use of bots and spam in the chat. So anyways, just to bring it back to the ES here, I'm going to give you the situation. Hopefully we covered and touched on all the questions, right? Let's go. Here we go. Situation. Open is here. If we fail to take out the overnight low and trade long back up through the opening print, so the sellers are not materializing underneath the overnight low, you are looking for a long-sided trade through the opening print to close the overhead gap to the prior low of day, which, as we pointed out in the market profile look, is a poor low. Okay, this is a poor low. So I would expect some sort of reaction off of the prior low of day, whether or not it's just a quick snappy reversal and then we move higher, or if it's a complete full-blown reversal, I don't entirely know. Okay, so I would expect something here, but I don't entirely know what that something will be. All right, so that is the long-sided trade early on in today's session if we start to see the failure of the sellers under the overnight low. Now, you might be saying, well, Matt, I'm not really comfortable taking a long trade in the face of a gap down. Well, that's fine. You don't have to take the long trade, but what you should at least be aware of, and you should not be surprised when and if the market moves higher to correct some of the overnight inventory, right? So you don't have to take the long trade, but just don't be surprised if that situation unfolds. And as I'm speaking to you, of course, we're aggressively pushing into the prior low of day here, which just means your risk reward is now going to be skewed. You don't want to be looking at a trade that looks like this, right? This cannot be your risk. This cannot be your reward. That is inverted. So please do not take that trade, all right? So anyways, ES, just be mindful that we can get some inventory correction based on everything that's taking place here in the overnight session. Looks like we're pushing towards the prior low of day. We'll, of course, just have to check back in closer to 9:30 when the bell actually rings. So some situations. Again, this looks acceptable to me. When and if we get here, I would watch for the gap fill reversal because we know the higher time frames are bearish. So I would carry forward the prior low of day as an important pivot. That's 3666.50. We'll round that up to 50 as the low, right? So 3666.50, important inflection point here. If we give ourselves the gap close and we accept within the prior day's range, as we know, the next inflection point is the value area low and the overnight high. It's also this little shelf from the bear flag into the prior day's close, right? So if we can break that, I think that some of the shorts who are loading up in here start to panic. So not only do we have the overnight shorts underwater, but with these people start to get underwater, I would carry forward this as a very important inflection point. So again, the two main areas of focus for me on this morning session will be the prior low of day. Can we produce a gap fill reversal for a significant move lower? Or if we accept in here inside the prior day session, watching for a possible, I use this term very lightly, quote unquote short squeeze up and over value area low, overnight high. The number there is 3683.75. 3683.75. Okay? That is the number which can unlock a little bit of of a short squeeze. We're not looking for the market to go to 4,000. We're not looking for the market to even go to 3,800. We're just looking for a little bit of acceleration through this level if we breach it on this morning session. Okay, so those are the two main focus points for me, at least, as we open up here closer to 9:30. All right, let's see what the chat seems to think is going to unfold on today's session. So here we go with the poll. Let's go ahead and do something like this. If you are bullish on today's session, you think we are going to move into this area, give ourselves a little bit of a short squeeze. Critical characteristic here is some kind of higher low. It's got to produce a higher low above the value area high, overnight high, right? So that's number one. Drop us a number one in the chat. If you're feeling a little bit more neutral, that we might do something like this, you know, it might breach that overnight high. It might breach that overnight low, but we're not really putting in any significant trend. Drop us number two in the chat. A little bit more neutral. And then for all the bears who, and look at that, we've already, closed that gap. We're right at it. But anyways, for the bears who think it's going to be straight lower off the open, right to the bottom here, the gray bar, then the bottom of the daily balance, which as we discussed is close to 3,600. So let's say that situation number three brings us to 6,300. Yeah, we wish if we were bullish. 3,600, right? That's a number three situation on this morning session. Okay? And if you've got no clue, if you've got just absolutely no idea what's going to unfold today, drop us a number four in the chat. That's A-OK. The market's in chop zone. It's a trendless market. Pretty difficult to read here. Number four is okay. All right, I'm going to let that simmer for just a moment here and type up the official YouTube poll. That way, if you would prefer to just click on something, you could do that as well. So here we go. What do you think? Bullish. Bullish. Can't spell this morning. I spelled it bullish. Number two, neutral. Let's go number four. Oops. Three, bearish. And now number four. I have no clue. All right, official YouTube poll is out there in the world. And I'm going to scroll up and see what we've got for chat responses. So, going all the way on up to the top, right to where we turned on sub-only mode. Let's see. David 10K is shorting Tesla. Good morning to Bella. Todd Scholes, nice move on SPY. Yeah, I'm using the cash close, Rob, on the TPO chart. I did not include the end period. What else? DXY going down a bit. Yep. Yeah, oh, look at this. What is going on here? So I don't know if some sort of news was just released or something. Do we have news? Do we have news? Let's see what we got here. There's some news about the dollar, but I mean, that was almost 20 minutes ago now. So that's not moving us. Yeah, we'll look into, if anyone knows the news in the chat, let us know. But we'll look into that momentarily. For now, G Money is up first with a number 3 in the chat. Jay trades with a 1. Buckminster Wallace with a 3. Ida with a 1. We're looking for anyone going to drop a 2 in the chat? No 2s until we get to Stargazer. Stargazer is the first straight up number 2. So we've got all of our chat responses so far in the first couple. Lots of 1s and 2s, some 3s. Definitely seems that a lot of 2s. Okay, as we keep going through, it seems like more and more 3s are showing up here. But it seems like based on the typed in responses, we're looking at many 2s, but oddly enough, the official YouTube poll is coming in at like 35% feeling bearish, which is the majority, at least in terms of a specific, a specific read. So, real interesting. Real interesting. Yeah, today is also options expiration, right? It's an OPEX week. So anyways, seems like the chat's feeling a little bit more bearish than bullish. Makes total sense. You know, we're in the midpoint / lower part of the range. Puts are expiring. So that's that. That's that for the ES, right? We sort of talked about our situations. Let me just do a quick recap here. Quick recap here. What the heck? Fed prepare rate hike for 75% next, but so is the Fed coming into a pivot? Is that the did the Fed announce some kind of pivot? We didn't see any specific headline here in the ES chart, but usually the SPY is a little bit better about catching current headlines. So let's quickly do this. Do we have SPY news here? No. No, we don't even have SPY news. Why isn't it's not showing up in the data feed here? Is it okay, so it's rumors going through Twitter? I don't know. It would seem that would be the type of news that could possibly cause something like this, but I don't know. It just news is news. I'll just focus on the price action. Just to reiterate what we're watching for, now that we're opening inside the prior day's range, look exactly where we rejected, right? That's not an accident. The market didn't go there and turn around by accident. As long as we're kind of underneath that, just watch for some coil, some opening range, and then a break of it. That's where I'm still very interested for a possible squeeze to the upside, noting the volume that went through here in the afternoon session. Oh, there's an article on Wall Street Journal. 3 Fed members speaking this morning. Okay. No pivot yet. All right. Cool. Well, we're just looking at price action, regardless of what the news is surrounding it. It does strike me as interesting that we no longer have a gap down. Simon Davis asked, can I please advise why I prefer the ES over the NQ? I'm just like an old man, and I prefer things that move slowly and more tamely. The NQ is like a wild wildebeest, and it's very, very volatile in comparison to the ES. So that's why I prefer the ES over the NQ. You can trade whatever you like. I'd prefer to use QQQ options if I'm going to trade the NASDAQ. So we've covered the ES. Let's do the NQ now. It's not like we don't look at the NQ. It's just that I prefer not to trade it. Let's go on up to the 4-hour time frame chart. See what's going on from this perspective. And what we'll remember from the NQ is that the NQ, it tried to get above here, failed obviously. And then on this most recent push higher after the CPI print, right? We never made it back to the top of the range. We left an unfilled gap. We know that the NQ on a relative basis is a little bit weaker. Here. And we're also poking down underneath the bottom of the daily balance, right? So the bottom of the daily balance kind of was established in this range. You can see support here, support here. We were pushing underneath it in the, the pre-market session. So knowing that, if you are looking for shorts, I would say that this is probably the preferable place for them. If you want like the relatively weak index, definitely use the NQ. All right. So 4-hour time frame structure, clearly much more bearish, more of an optimal lower high. Never really came close to the equal high. Let's drill on down to the hourly time frame and take a look at the trend change happening here as well. So you've got high, lower high, interestingly enough, higher high on yesterday's session, but lower low. So I would just focus on this kind of look here. And that to me seems like the prevalent downtrend on the hourly chart. So in terms of levels, what does that set us up with for today's session? Well, if you, actually, is it this? No, I would go with more of the bearish outlook in the NQ, especially based on the 4-hour. But in terms of levels, let's go to the 15 and discuss levels. We're underneath the bottom of that balance. This is ultimately the gray bar right here. So use your overnight high, and also it's not the value area low. The ES value area low is stacked right here. The value area low in the NQ is low, lower, closer to the low of day. I would use, I would use this level around 11,110 as a possible inflection point, just based on where there could possibly be some squeeze from the folks who are short from in here. If we take that out to the upside and put in a higher low above, that's where you're looking for a little bit of a quote-unquote squeeze to the upside. So 11,110, Firm push here. Firm push. Interesting stuff. Like way from almost the overnight low. Anyways, NQ. Let's walk through the 3 questions briefly and make sure we're on track here. So high, low, opening back in range, more of a patience play as opposed to the gap down where there was early morning possibility for trade. Question number 2, overnight range. Now we're at the overnight high, right off the overnight low. Overnight low does need to be adjusted. Let's do that together. So question 2, slightly more bullish now. Question 3, overnight inventory position is still, or it was 100% net short, but this move has certainly neutralized some of that trend here. So question 3, I would say, not quite 50-50, but definitely let's go like 60% net short. Right? I'm saying that because of the volume that's coming in here. Yeah, wild market here. But anyways, in terms of the NQ and what this means for this morning's open, I would say patience in this area here, inflection point over 11,110, and then flushes under the prior low of day, just retarget the overnight low. All right, so patience in here. This is an inflection point. This is an inflection point. Higher lows above, that's tradable. Lower highs underneath, that's tradable. Target here and target here, right? Gray bar, which is the top of, not the top, but the midpoint rather, of the daily balance, and then the value area high as well. Okay, that's your target. On the bull side, target on the downside. All right, so we've covered the NQ. Let's take a look at the Russell /RTY. What's going on in the rut? Taking a look here. Again, we've got to do some adjusting to our overnight levels. Let's drag that up to its rightful spot now, and this down to its rightful place. Good, and we'll go to the 4-hour chart. So 4-hour. 4-hour Russell is the most bullish of the three that we, of course, know about. Here's a balance range. We made the equal highs. We're kind of in the midpoint of the balance range. We know that. The original balance was down here, and we did poke down underneath it, and we're currently back testing the top of this balance from right around in here. So that is something that's noteworthy, but I would look at the grand balance, the larger one here, and just say, okay, we're in the midpoint. It's got to be a little bit more neutral, especially after making two equal highs and not making lower lows, right? All of these lows are equal. So Russell has some relative strength to it from that perspective. Let's take a look at the hourly chart. See what else we can learn about this. So hourly chart is in a little bit more of a downtrend, right? We've got highs, lower highs, equal high, lower high, possibly, not guaranteed, but possibly somewhere underneath the value area high on today's session. Would it also be reasonable for it to be somewhere here, for a rollover off of the midpoint, the back test of the midpoint of the prior day's range, right? You kind of have this look of a break, retest, and lower. Certainly would be reasonable. So I would watch your overnight high as an inflection point in the Russell. Let's go to the 15. Excuse me. Apologies for the cough. Yeah, look at this. Interesting. Spending more time above. Overnight high, inflection point. Russell, so on the 15-minute chart, again, we're opening back inside of range, and interestingly enough, this has been the one that's been flirting above the top of its little balance range into the close yesterday. So shorts from here starting to feel some pressure as we possibly move higher, right? So, I would use this level as an inflection point around 1714.50. 1714.50. It's the bottom of this gray bar, 1714.50. Okay, if we can spend more time above, that's bullish, and I would expect the Russell to act as a leader. It's been that way for a little while now. Okay, it's been that way for a little while now. It's been a leader. So Russell over 1714.50, lean on longs. Underneath, okay, fine, shorts from here are still content, and possibly the rotation here can take place on the sort of break, retest, and lower. 1714.50. I'm just trying to make sense of these markets. I feel like my head's spacing out a little bit here as I'm making sense of this most recent push higher. But it's just so odd seeing this type of thing. So, anyways, Russell, I gave you the number I'll watch. It's 1714.50. If we're above that, fine. Bullish, acting as a leading indicator. Let's go quickly back on over to the ES. I see some folks saying that it's quickly and sharply reversed. Yeah, absolutely. Absolutely it did. Yeah, I mean, the market's just unreal right now in terms of volatility. Volatility's through the roof. The range is really tough on the daily chart. Yeah, the upper wick certainly is nasty. Sellers stepping back in. Anyone who is long off the bottom taking some profits. So now, as I was talking about earlier, right? As I was talking about earlier in here, that type of volume is indicative of non-hedge fund, non-pension fund activity. But look at the volume that just got put in on this bar. It's like greater than everything else that went through in the prior day's session. This, again, there's got to be, everyone's talking about the Fed and possibly pivoting to taking a chill pill with the rate hikes, but that type of news announcement might make hedge funds, pension funds, big banks get active. But the volume here is really significant, which is interesting to read into just slightly in saying, now the situation is this. You've got longs, like obviously based on the amount of volume that's gone through here, you've got a whole bunch of longs piled in here. So now I don't know necessarily that it would be, oh man, tricky open. Tricky open. Trying to make sense of this in my head. I think that the best thing to do, guys, is just to keep it very objective and use the levels still. The levels have never led us wrong. Trying to understand the psychology here is a little bit tougher, but I would say ping pong in here, still watching for inflection points over this pivot high from yesterday afternoon, the value area low, and then breakdowns back underneath the low of day. Again, just rotation to the overnight low. I think keeping it simple will serve us better than trying to make this any more complicated than it is. If we open in this box, I'm watching the top here and I'm watching the bottom here. That's it. If we're above, great, so be it. We'll look for longs. If we're below, great, so be it. We'll look for shorts. Right? I think oh man, it's just the psychology here is so interesting. Now that we've got this upper wick after a big push, after being on a gap down, let's keep it simple. All right? Let's keep it simple in the ES and leave it off at that. All right? If you're so confident that it's algos and not longs and you want to stay away from, I'm talking to Mr. 3EK, you can do whatever you're going to do, but I'm just going to keep it simple and say, boom, long above, short below. Even so, here's a counter argument to you, Mr. 3EK. All I would say is that even if a long is initiated by an algorithm, is it still not a long? Let me ask you that one more time. If a long is initiated by an algorithm, does it not change the fact that it's still a long position? Absolutely not. It doesn't matter if an algorithm or a human or a discretionary trader or a retail trader or a hedge fund or a bank, it doesn't matter who or what initiates the long, it is still a long-sided trade. No, I don't believe that. I do not believe that it's not directional. I don't believe that it's not directional. There's two sides to every trade. You have someone going long, you have someone going short. When you do something like this, more trades are going through on the ask, right? People are going higher. It's getting bid up higher and higher and higher. The bids aren't getting filled. They're getting filled on the ask, right? So I don't know. I don't really want to argue it too much, but I would just say a long is still a long, right? When you've got net movement in the upward direction, you've got net longs in the market, people want to defend the long position. They're not just longing for the sake of going long. They want to see the market move higher. So anyways, interesting little thought experiment that we just ran here on the stream. But let's get down to business in the sectors and see if there's anything interesting taking place from a sector perspective. Excuse me. XLK, above the flush point still, but threatening it at 119.75. Jeez. Yeah, the sore throat thing's catching up to me. XLK, underneath 119.75 gets interesting for the short trade. It's the overnight low. That's just the area that I would watch on today's session. So 119.75 in the XLK, heaviest weighted component of the S&P 500. Keep an eye on it. 119.75. 119.75. Next up, we're just going to filter through for any obvious setups here. So XLC, communications, underneath 49.20, obviously with the snap news, strikes me as bearish, right? Falling back down into the original balance. It's no longer really holding up beautifully for higher lows. Bearish pressure for your S&P. XLU. Now, I can't do the first five today. We're going to actually have to head out around 9:25. I've got about 5 minutes left, so we'll try to breeze through the remainder of what of what we've got. My voice tone and cadence says I should get some rest and eat. Keep hydrated, take a break. Yeah. I got my 8 hours of sleep last night. I've had my water for the morning. I do appreciate people looking out, though. Taking it easy is definitely towards the top of my list on today's session. It's another reason to not push it on a Friday, right? When you're feeling slightly under the weather, you don't want to make an emotional decision or a lazy decision. You don't want to get too lax with the market. It's best to dial it down just a little bit. But anyways, thanks, guys, for the well wishes. We're going to continue through the sectors. Nothing crazy happening in industrials. XLF pulling back into 31. So pre-market, you've got that 31 retest. So is that going to produce the higher low? That would be the ideal location. So watch XLF today over 31. If XLF stays above 31, fine, it checks out as being slightly more bullish than bearish, but the XLK flush point at 119.75 is still a focus as well. All right. Next up, XLP. XLP. Nothing here, sloppy choppy. Materials, sloppy choppy. XLV, back down underneath 124 and getting some price acceptance underneath in the pre-market strikes me as not a good look. Second heaviest weighted component of the S&P 500, slightly more bearish than bullish, right? XLE Energy, not in love with the chart moving higher here. We know that this is not really a great look for the market finding a bottom. XLY, already flushed its sort of area right in here yesterday with the upper wick rejecting the upper portion. So I would have more of a bearish stance in the XLY. It's a heavier weighted component, so definitely read into that a little bit. And real estate kind of sloppy choppy down towards the bottom. All right, so nothing too impressive from a sector perspective. Let's take a quick look through the cash indexes, and we'll breeze through the remainder of this morning's analysis. Again, I got to hop out here at 9:25 this morning. SPY daily chart, there's your balance area. Obviously, look above, fail, possibly in play towards the bottom here, 356.75. Pushing, weird thing taking place here in the pre-market. Your SPY level is going to be at 366.25, 366.30, 366.30. Prior low of day, prior overnight low. Just use this inflection point right here, 366.30 for your upside breakouts. Anything that stays here is kind of choppy. That's above the prior low of day. Then breakdowns of the single prints get you closer to that 356.75. Okay, that's your downside trade. Next up, QQQ. QQQ, NASDAQ 100, more like the XLK with a very obvious flush point in place, right? You've got your 3 days of balance, 3 equal lows, 267.50. We're opening right on it. So if we fail it and move lower earlier on today's session, that to me would be a pretty big bearish indication. Breakdown in the 3-day balance range, look to rotate down towards 261.25. That's a pretty decent and solid setup here in the QQQ. Multiple inverted hammers, rejecting the backtest of this range here. I would say the QQQ is probably a top watch for a short this morning if we fail the 267.50. In terms of your upside lift number, it's going to be over 270. Over 270 possibly puts the squeeze on to the upside. Another thing to point out here, guys, just while let's go back to the ES SPY chart here for a second. We're sitting right on the top of the weekly expected move, right? This is what the options market priced in, and we're just hanging out towards the top. I mean, to get massive follow through would be like a 2 sigma move to the upside. I'm not saying it can't happen, but this is kind of the expectation of the market anyways. Same thing with the QQQ. The Q's sitting even more abruptly on top, right? So it doesn't strike me as too crazy. IWM Russell 2000 small caps. Here is a balance range, obviously. Here is your midpoint of that range. So 169.20 is your level. Again, we're opening right on it. More acceptance above keeps you neutral. And then falling firmly underneath, fine, maybe a little bit more bearish, looking for the downward rotation towards the bottom end of the range if the rest of the broad market's falling apart as well. Knowing that this has acted as a leading indicator, I would what I would prefer to see in the Russell. And the market rarely gives us what we want to see. We ultimately have to deal with how the cards fall. But what would be like a textbook situation? Let's draw on a nice little textbook here. Let's see. Something that looks like this. Right, there's our textbook. A textbook situation here in the IWM would be to put in a higher low here and do something like this to move back to the top of the balance as a leading indication for the broad market to move higher. The SPY to find a bottom, the Qs to find a bottom. This would be the textbook situation in IWM. All right, so that is the broad market. We're coming into 9:25. I'll quickly blast through these charts and see if we've got any setups that are obvious. Apple, not so much. Chopping around here on the daily chart, very ugly. Netflix, inside the balance, but flirting with a breakdown here. Again, remember what we discussed yesterday. Inside bar actually printed yesterday, so now you've got even more of a reason to just look for a long over the top, short underneath the bottom. With what's going on here in the pre-market, I would probably favor the short outcome under 265 quarter. Tesla, what's going on in Tesla? We got some of that gap fill. We did come back to scratch and a little bit of profit after that losing trade on stream yesterday for the second push into the gap. But regardless, here this morning, opening back down underneath the lows of this balance area here, which does strike me as bearish, considering this can all be overhead supply, right? So Tesla not looking great. Google, nothing obvious here. More of a gap down, obviously, with the XLC and Snap news. So could be a gap fill candidate for overhead, but I really wouldn't push my luck in Google, considering price acceptance is happening under $100.50. Meta, obviously moving lower as well on the Snap news. We're opening close to 127.40 here. Yeah, kind of unfortunate that this broke down in the pre-market and wasn't really tradable setup. I don't know. I don't see anything obvious other than to watch for gap rules inside of Meta, NVIDIA. Let's see. Nasty shooter yesterday. Inverted hammer, right? That's the same thing as saying shooter. So underneath the low, which it does look like we're opening underneath the low. Any acceptance that is beneath the prior day's range, just look for a short inside of NVIDIA with the failed move. NVIDIA is a short setup underneath or rejecting the prior low of day. All right, so underneath 121, short setup in NVIDIA for lower. That's what I'd prefer. What else do we have here? Microsoft is opening above its flush point, so I would say Microsoft would be a top watch as well on the short side. If the market's falling apart, watch this 235.10 to open the door for lower. We talked about this setup yesterday. We've got the inverted hammer yesterday. Still looks beautiful for a downside move. Any choppy in here, just don't want to be involved. Last but not least, the mini beast. What do we see? Kind of a daily balance range, and we're opening in the midpoint towards the lower edge, but nothing to do in Amazon. All right, keeping it simple. That's going to be that. All right, we did Meta, Golden Girl. We just touched on Meta. We talked about how possibly looking for the gap fill, gap fill situation in Meta. All right, I got to run. I appreciate everybody tuning in. Please make sure it is Friday. Don't do anything silly. If you're red on the week, that's fine. Don't swing for the fences. You've got all next week to trade, to come back and remake your money. If you're green on the week, don't make it a red week. I wish you all a great trading day. If you're not in the Discord, get in the Discord. And with that being said, I will see you in the next one.